Tesla stock is up today, 7.5% almost, as it turns out that there is demand. See how much it increased in just 1 week after the price cuts. But we actually really want to compare this number to the year-over-year data. And here we see a 76% increase from the same period in 2022. That's a big deal. But even more importantly, that compared to a 14.5% year-on-year decline in overall retail sales in China for automobiles. Electric and hybrid vehicles in the country increased 36.5%, the data showed. So Tesla is outpacing the adoption of EVs. Tesla is taking a bigger share. Well, at least this week Tesla is. But then again, even more importantly, look at how all of this compares to the beginning of the last quarter. So you can see very few sales and now a whole lot of sales. This is because Tesla is ending the wave of deliveries. This saves cost for Tesla. So week over week, 500%, that's wow. And more really good news. Hertz and Uber announced they will buy 25,000 Teslas and Polestars combined for Europe. This is in addition to Hertz's purchase of 100,000 Teslas in North America. There are still people that really do not believe that the EV transition is happening, but these price cuts, well, they prove that EV demand is unlimited if the price comes down. We usually know that the media, well, I don't really see the media really treating Tesla nicely, but look at this. Xpeng just slashed EV car prices. Tesla stock is rising anyway. And this is also really relevant to Tesla stock specifically. The markets tend to bottom 3 to 6 months before downward earnings revisions cycles are done. For Tesla stock, I do expect more EPS revisions. As you can see, the projections are coming down. And that is expected. The stock reached its all-time highs before the earnings peaked, and then it started going down. So that's expected, and you would expect the opposite to happen as well. So if this is the bottom, then we would still expect to see earnings revisions to keep going down. And if we do have a very bad recession, I expect the earnings to basically be wiped out temporarily, completely. And then I would expect them to recover very strongly after the recession, because Tesla would take more market share, while others would be really struggling, losing market share, possibly even facing bankruptcy. Tesla stock is up 28% since the low price on the trading day before Elon Musk sent this tweet. Now, I can't take 100% of the credit, but this is the chart that Elon Musk retweeted that James made. Well done, James. Well done. Today, looking at all of the news headlines, everything just seems positive about Tesla. Tesla is seeing unprecedented demand, stores hitting new records. Also, it appears that Tesla perhaps already made a boat. There is more good news, by the way, for Tesla. We'll dive into those, but first, check this out.
What is this lady doing?
Look how much water there is. Wow, the car's almost sinking.
Keep going, lady.
Oh my God.
Well, you know, there's no engine.
Wow.
Oh.
Looks like the build quality of Teslas, well, it looks pretty good. We are going to see a bull-bear battle between Ross Gerber, a billion-dollar fund manager who does own Tesla stock, and then Gordon Johnson. That's going to be a fun one. Mark your calendars, everybody. Of course, I will be covering this as well. We are continuing to see signs of inflation slowing down, which is good. For Tesla stock, we want that. We also have Goldman talking about Tesla stock, and they did cut their Tesla stock price target. The price cut was pretty small though, down from $205 to now $200. Mark is one of the better analysts, and on tipranks.com, he ranks pretty high. Since 2014, he outperformed S&P 500 by 5.6%, which is difficult to do. So we want to pay attention to what he has to say. And what did he say about these horrible price cuts that everyone is worrying about? Well, certainly not Tesla stock investors worrying about those because the stock is up today. But anyway, let's see what he has to say. While the reduced prices for Model 3 and Y helps the company to better address the roughly 20 to 30% of vehicles sold in the US market in the 40 to 55,000 price band, the price cuts also imply that recent orders were tracking weakly. Delaney wrote in a note to clients, "We therefore lower our EPS estimates on reduced ASPs." Well, let's not forget that, to quote Elon Musk, basically, Tesla's pricing was embarrassingly high. So no wonder the orders slowed down for a little bit. And you want to pay attention right here. On the flip side, reduced prices will boost volume of vehicles sold, and when factoring Tesla's gigafactory expansions and ramp-ups, the automaker may actually be able to weather any drop in retail pricing with improved efficiency. This is what we have been talking about for forever now. We see stronger volumes as important for Tesla's vertically integrated model, especially as its new factories likely offer attractive unit economics at scale. We believe cost of goods sold per vehicle at the new Austin and Berlin factories over time will be closer to Shanghai than to Fremont, and in the low to mid 30,000 per vehicle range. This is important because Fremont, that factory was purchased from a legacy automaker. It was a complete poop show. It was not designed from scratch by Tesla to make it efficient, but all of the other factories have been. And Austin and Berlin have this benefit of learning from Shanghai. So there's no way that they did everything perfectly right in Shanghai. No, that's just not how it works. So you learn from all of these mistakes, and now you put all of the new experience that you have from there, and you incorporate that in all of these new factories, and the result may surprise us all. Finally, Tesla's scale and unit economics are a big competitive advantage versus traditional automakers, Delaney says, and any increase in volumes is a net negative for competitors. Delaney notes negative margins for Tesla competitors along with limited availability of competitor EV offerings are another factor in Tesla's favor. So even though we had some price cuts today, Tesla stock is up. That makes sense, right? It does, because Wall Street is always behind. Or at least usually when it comes to Tesla. If you want this midnight cherry color in, I think, Denmark, you're gonna need to wait for that for 5 to 7 months. This color is just so pretty. I want a color like this one. Check this out. Just switched to Tesla insurance from Geico. A 10-minute app experience saved me 50% or more by switching from Geico. Saved $1,000 per year. Tesla should really advertise that really hard. That makes Tesla vehicles even less expensive. Yep. There's one bear that has been talking today about Tesla, that is Tony, and he actually is a pretty good analyst. He's ranked pretty high, and his returns are also pretty decent, 6.5% over S&P 500. Tony cut his earnings estimates substantially, down from $4.96 to $3.80. However, even though he says sell Tesla stock, his price target is $150. That is above where Tesla stock is right now, by the way. He wants to see more evidence of demand in China specifically. I tweeted this earlier today. Tesla needs to get the compact out in China. When you compare BYD sales to Tesla, BYD is kicking Tesla's butt in total number of EV sales, strictly within China only. But we have to understand that they are not really competing in the same price segments. Now, although the Model 3 costing quite a bit less, they sort of are starting to compete. But I would like Tesla to have this kind of growth as well in China. So Tesla, get that compact out as soon as you possibly can. That would be a good idea. And I'm sure they are already working on that. So we're not going to announce it until they basically have it ready to go, because then that will cannibalize some of the demand for the Model 3 and perhaps even the Model Y, the cheaper trims. So good news today, Tesla up basically 7.5%. Makes me a little bit sad if this buying opportunity does go away, but hey, I know many of you are really happy, and these are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.